Hello and welcome back to Crypto Clarified. My name is Dovile Silenskyte and I'm responsible for digital asset research at WisdomTree Europe.
And I'm Vinh Tran, Associate Director of Business Development for WisdomTree Digital Assets.
Today we're joined by Walter, Head of Institutional Solutions at Marex Financial Products, and we discuss structured solutions around crypto exchange-traded products and also his views on real-world assets being tokenized now. It's a very interesting discussion and really worth listening in. Hi, Walter. Very great to see you here. Thank you so much for your time. And before we kick off, would you mind giving us a brief introduction to Marex? Who you are, what you do, how you work with broader financial markets?
Well, Dovile, Vinh, it's a pleasure to be here. So thanks a lot for having me today. Sure. So quickly, personal introduction. I've been with Marex for a year and a half now, in charge of the institutional solutions part of the business in our solutions division. Before that, spent my whole career working for investment banks, about 20 years, and the last 4.5 with a fintech, but very much from the traditional world. Marex, in a few words, we are a diversified financial institution. We are public, listed on the NASDAQ in the US, where you're based, Vinh. Investment grade rated. We have about 3,000 employees, a bit more on the last count. And we have 4 main divisions. Agency and execution, which is our historical brokerage and now prime brokerage type activities. Market making. Clearing, which is a large part of our business. And solutions where I sit.
Fantastic. You're 10 times as big as WisdomTree, so that's quite a bigger scale. And what do digital assets mean for Marex? What are you doing with them?
Yeah, so it's quite actually interesting because they, like yourselves, started that journey quite a long time ago. I said there because I was not there at the time. So really first involvement started back in 2018, and really what we've tried to develop over time is to be that bridge between the traditional finance world and the digital asset ecosystem. The result today is that we offer pretty much the full value chain around crypto, from market access, clearing, execution, leverage, structured products, you name it. With the ability to again do traditional products, but with our access, into the ecosystem. When you look at our division solutions specifically, just to be a bit more granular, we are specialized in all the OTC type solutions on crypto. So options, be they vanilla or exotic, the structured product, linked to crypto, collateralized lending, systematic strategies. We have dedicated traders, quants, sales allocated to the asset class alongside the other asset classes. To give you a couple of numbers, I was actually checking before our discussion today. Since inception of that business, we have issued now more than $3 billion of structured product on crypto underlyings in terms of notional. And actually, we've also issued more than $3 billion of products linked to crypto ETFs and ETPs. So quite a large part of our activity and a great part of our activity.
So to double click on that, I think crypto assets, digital assets have been they really found, let's say, a product market fit within institutional investors and obviously beyond retail, right? So I wanted to talk to you about, given your involvement in the space and how long you've been there now within digital assets, how have you seen that institutional demand evolve, whether it is starting with direct crypto exposures, all the way to structured finance and structured products? And then my second question to that is, when you say structured solutions around digital assets, what do you mean?
Sure. So starting with the first one about the evolution of the audience for crypto, we've seen exactly what you're describing at Marex. So, very, very originally, the audience was mostly a portion of the retail market, those individuals who had a vision, had, an interest in crypto assets, and it was quite limited, quite spotted, but people with a lot of conviction. So that was like a part of the retail market. Then moved into, I would call it the wealth space. So wealth managers, family offices, starting to get exposure to crypto assets. And then, yes, more recently, the more traditional institutional investors. And the way we see them interacting with the asset class is in two ways. First, we have what we refer to as the crypto natives. So really, those institutions really focused on the digital asset ecosystem. And there increasingly, we see them use products and solutions which come from the traditional world, but applied to crypto assets. For example, we've become very active in collateralized lending on crypto. The product itself has been around forever in the traditional world, but now we're using the same type of structures and documentation to apply it to the crypto world. And then on the traditional institutional side, clearly increasing interest, increasing curiosity. We still see mostly people who are not yet ready to get directional exposure to the asset class, but who want to get some either risk managed or market neutral exposure to the asset class. And I'm happy to develop on those two, but that's really the thinking on our side, which is the traditional investors not yet ready to take the full volatility and potentially risk linked to crypto assets, but want to have some of that part of their portfolios. I think you with Tran have done a lot of research showing that there is a benefit in portfolio construction to have some allocation to crypto. So they want to have that. They may not yet want to have the full downside, and they're ready to give up some of the upside to get there.
Yes, absolutely. So as I talk to institutional investors all across Europe, some of them have very interesting requirements. So there are investors who want yield from Bitcoin. And as we know, that requires additional structuring. Others are not comfortable with the volatility that they see for the products. So they want to control that. Or they are not comfortable with drawdowns that could be experienced because they see that they have very strict compliance rules, that if there is a drawdown of X%, then they need to sell the product. And they know that in crypto, there may be a drawdown of X% on any day, and then a recovery of more than that a day after, and they want to avoid those potential drawdowns. And when we started our discussions, I think that was over a year ago, we talked about you creating structures around our physical crypto exchange traded products. So we have 8 single coin products and 4 crypto baskets. And you as Marex indicated that you're able to construct around all of them different structures that would address different clients' demands. So would you mind just walking about, for example, when you hear me saying client wants Bitcoin yield, or client wants to control volatility, or client wants to control drawdown, how can you as Marex implement that using our ETP as a building block?
Sure. So basically, we're using mostly products and solutions which, have been around for some time on the other asset classes, but just applying them to the crypto asset class. So on the protection and risk management side, it's mostly 2 typical solutions, which again are not new. One is formal principal protection. So the investors buys a note issued by an insurer, which can be Marex or somebody else. And they know that whatever happens to the market, they will get a minimum level of capital returned at maturity. And then that note also provides them with some upside exposure to the Wisdom Tree ETPs. Now, of course, there is no free lunch, there's no miracles. So depending on the maturity, the currency, and the underlying, the participation to the upside may not be 100% in certain cases. Actually, in other cases, it may be more than 100%. So if you have a longer maturity and, for example, a partial protection, you may be able to provide partial protection and some leverage upside exposure to the wisdom tree ETP. Sometimes the other technique used for risk management is volatility control. So we apply a systematic rebalancing process on the ETP to, control its volatility, which can be used as a direct investment or as an underlying to a protected product. So that's on the protection side. You mentioned yield, which is very interesting. Well, in general, given where rates are, and in crypto in particular, given the volatility. So there are different ways to generate yield, but one of the very established way is to sell volatility. So there are different ways to generate yield. One of the ways is to sell volatility. And given the volatility of crypto, which is high, it is possible, even with short, maturities, to offer relatively large coupons to investors.
I think what's interesting about what you're saying is when you mention volatility and yield, I think we're starting to see that evolution within the crypto native community. So I think this is a good segue into what we're seeing in the US when it comes to tokenization. And I think before we dive deep into that, I think I would love to know your perspective on technology and how you view that when it comes to delivering these more complex structured solutions.
So I'm still relatively new, to be frank, myself, to the digital asset world. But one of the things which I find the most fascinating and promising is actually the technology itself, right? And it's the ability to, from an operational perspective, offer solutions which are 24/7 with limited, number of intermediaries, and therefore potentially in a more cost-effective manner, right? And the fact that we cannot buy, with that, if you want to buy stocks, we need to wait for, specific trading hours, US time, if you want to buy US stocks, not on the weekends, not on holidays, still feels a little bit backwards in 2026. The blockchain technology and tokenization, for example, I think it's fascinating because it will allow us to remove a lot of those restrictions, a lot of those frictions, and I can see a lot of value there.
I agree. And I would think WisdomTree does too. And across the board from our European business and the US business, I would say, obviously, Dovile mentioned the crypto ETPs that we're doing there. Our strategy in the US is different. We were talking about this where we're tokenizing US-based fund structures and bringing it on chain. And I think double clicking on your point about access, I think that is, I would say, step one when it comes to tokenization, the ability to access these products either on chain or in this 24/7, 365 manner. But I talk about how that evolves down the line because now we're hearing conversations on the US side when it comes to structured products, tokenized yield, how to leverage strategies. And then you enter the world of DeFi. And I know we were talking about this before, but the idea of vaults, have you heard of the term? Do you know what they are? And what are your opinions on them?
Yes. So in my discovery process, I've come across vaults, and even though I'm still not 100%, familiar with them in minute details, but those seem to be very efficient, using my old vocabulary, almost wrappers as a way to provide exposure to a given strategy to investors. And I say wrapper in quotation marks because there is no actually wrapping. It is really, I guess, a smart contract which provides the exposure to that strategy to investors. And think about the way, digital asset infrastructure will change the way we invest in the future. You can see how asset management in general, at least a portion of it, will migrate towards vaults implementation as opposed to, mutual funds before, and maybe other more recent, vehicles that are around.
What types of assets do you think will be tokenized at scale first?
Equities. I mean, you're in the US, and that remains, still one of the main asset classes for both retail and institutional clients, and we see a lot of efforts to tokenize the equity and a lot of benefit to be able to react to information which is 24/7 and implement those views in the equity markets very efficiently. And when we're talking about the bridges between traditional finance and DeFi, I mean, that's one of the things that I find fascinating, right? Because if you think about digital assets, a few years back, it was making the digital assets, so some of the coins, available to investors on the traditional side. And what you have done, with True with your ETPs has been one of the great efforts to make that available in a way which is standards, customary. People understand ETPs, they're familiar with ETPs, and it's a very efficient way for them to get exposure to digital assets. And then we have tokenized equities where we're going in the other direction. There is so much capital available in DeFi now that there is value to bringing our traditional finance assets into that world, right? And tokenizing equities, money market funds, mutual funds like you do in the US on the Wisdom Tree side, fixed income. And then you can think about those asset classes which have high operational constraints, right? So anything with a private in front of it, private equity, private credit, where the bias to investment are high because it's not easy to get involved as an investor, and where a tokenized version of that may help. Nothing is perfect, and I'm sure that there will be, consideration on the other side to be mindful of. But yes, we are very keen to see how we can help that ecosystem ourselves on the tokenized side.
And talking about volatility, so crypto trades 24/7. And when a big new event happens on a weekend, crypto is a market that goes through sharp drawdowns to reflect what's happening during the weekend, because people are trading crypto because everything else is closed down for the weekend. Once we have tokenized equities, tokenized fixed income, don't you think that there'll be much more volatility in traditional markets? And don't you think that people will demand the similar structures to what they demand now around crypto for tokenized products?
So maybe, Dovile, talking about 24/7, if you can share a bit of a personal, angle to it. As I said now a couple of times, relatively recent in terms of my involvement on the digital asset side. And I realized over the last few weeks that it was a 24/7 market and had to, intervene in certain situations, at night and on the weekends with my colleagues, which makes the way we work and the way we live, a bit different. So not only upside, I would say, from a lifestyle perspective. Now, in terms of volatility, you're right, but I think you can look at it both ways. But actually thinking about it, in my mind, the ability to express views or new information more easily should actually potentially reduce volatility, or maybe not volatility, but reduce sharp movements of assets. Think about it, right? If you look at the equities market, close from Friday to Monday, typically and often it happens that bad things happen over the weekend. There's nothing anyone can do about it, almost, right? If I simplify. So that information accumulates over the weekend, and then Monday markets open, and that's where you see potentially very disruptive behavior in the markets, because all of that information over the weekend needs a way out, and the way out is the open of the Monday, and then, the markets may go all over the place. Whereas if the information could have been distributed into views and expressed into investment over the weekend, maybe the markets may behave in a more rational manner, if I may say, during most of the times. So I see it mostly as a benefit rather than negative.
That's very interesting perspective. And as I listen to you, yeah, I see your point. But now let's go back to you needing to work during the weekends. I I guess you're referring to the mass liquidation events that we had on the 10th of October last year and at the end of January this year. Would you mind just talking us through what it required you to do to make sure that your structures continue to operate as they were designed?
Yeah. So actually, one of the main purposes of the structure that we offer to investors is to actually isolate them from those events, right? And to transfer that risk to us as issuers, and then through our hedging, then it becomes our own risk management. So in terms of impact on our clients and investors, it has been relatively limited, because again, on our side, few of them have a directional exposure to the market and therefore less sensitivity to those events. From a risk management perspective, for us, Marex, very important because we take that risk, right? And that's why we've built an infrastructure from a trading perspective, risk management perspective, quant perspective, allowing us to, through automation and oversight on top of it, to be very diligent and disciplined in risk management.
Regarding infrastructure, I think that's an interesting point. And when you talk about 24/7 as well, what, in your opinion, is the blocker when it comes to tokenization being the next technological evolution where we get to a point? Do you think it's an infrastructure roadblock, or do you think it's an information roadblock?
That's a good question. Not an easy one. What comes to mind is actually maybe a third one, something along the lines of trusting the parties involved, right? Which is interesting because, and I don't know if I'm going to be very articulate, but let me give it a try. Well, the digital asset world is all about removing intermediaries, right? Not having to trust anyone because it's all in the code and the contract. When you think about traditional investors, they still need to know who they have across the table, and that, I think that may be the challenge for tokenization, because they would want to know that there's someone involved who has the right institutional organization, the right governance, the right regulations to provide them the oversight that they need. And I think that's where, by the way, counterparties like, WisdomTree or Marex are really bringing something to the table to the investor community. You, like us, are traditional in terms of where we come from, institutional, highly regulated in a lot of different countries. And for the traditional investor community, those are important traits they want to have in the counterparts they work with.
I like your point on trust, and it's ironic because I think what Dovile and I, we end up selling is trust to a trustless based system, right?
Yeah.
So it's fascinating in this discussion. It keeps me smiling. But when you think about what is in the market now from structures around crypto ETPs, what further developments are needed? For example, are there enough options? Are there enough futures? Are there enough tools that you use for your structures? Or do you see other market participants still needing to develop further tools that could be used by you to provide the solutions to clients that they need?
I mean, certainly the evolution has been incredible over the last few years, right? And we've seen traditional providers like traditional exchanges becoming increasingly sophisticated in the way they can support the digital asset ecosystem. Some of them soon we expect moving to a 24/7 cycle for digital assets, which is not where they come from. We see some more crypto native exchanges moving towards the regulated side of the ecosystem. So I think we need that to continue. So we need the traditional players to continue to help bridge that gap to the digital asset world. We need the main digital asset players to organize themselves in a way which provides even more trust to the ecosystem. Product availability and liquidity, of course, are always considerations, but those have already increased significantly. So there is a lot of liquidity in options on both the coins themselves and the ETFs or ETP linked to the coins. The ETP innovation that you and others have brought to the market has helped significantly both the product construction from our perspective as social product providers and the acceptance of those products by investors. So yeah.
Interesting. And as you think about this year, so we are now in the first quarter of this year. We still have a lot of the year left, and every single week surprises us with new big market developments or new big activities that are happening all around the world. How would successful 2026 look for Marex? Like at the start of our discussion, you mentioned some very large metrics. Like, how do you want to grow your business? How do you want to evolve it? What would success be like?
So at the group level, and it's public information, we want to continue to bring the different pieces that we have to serve the digital asset ecosystem even more closely together in a more consistent manner across our offering. So that's one of our continued objective. And again, that's across prime brokerage, clearing and Anderson solutions. That's one of the big objectives. If I look at our evolution in terms of business on the digital asset side, that has grown significantly year on year, and we have very high aspirations. And we hope that we can be a very useful player being that bridge, right? And that's really where we think we can differentiate vis-a-vis others and the value we can bring to the table.
I think the interesting point about that bridge is it sounds like TradFi DeFi world, it ends up we're just meeting in the middle. So in that perfect sweet spot, what do you see as the biggest opportunity, whether it is structured products, whether it is crypto investments for institutional investors or retail even? What is that biggest opportunity?
So the main opportunity, I think, is in the institutional investor space. WisdomTree, like ourselves, Marex, have seen the move of some of the large institutional investors starting to include crypto assets into their portfolio, some of them publicly. But it's still a work in progress from their perspective. And I think we have a lot of responsibility in helping educate them, communicate about the benefits and the risks of crypto assets like any other asset classes, and to help continue that evolution. We are convinced that there is value in having some crypto exposure in portfolios, be it directional or being market neutral. And we think that there is still a lot of capital which can move and hopefully will move in that direction.
And can you add your on-chain perspective to that as well, outside of just crypto exposure?
Yes, and then the other big opportunity is in the other direction, which is the capital pools in the digital asset world. who increasingly want to diversify away from just crypto assets, but don't want to leave that world. They don't want to go off ramp and then go and spend cash to buy a stock with a broker. They want to stay in the digital asset space, and that's where the tokenization of real world assets, RWA, is the other big opportunity going into that direction.
Music to my ears. To clarify, the views and opinions expressed in this podcast are those of WisdomTree and Marex and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.